Welcome everybody. So today I kind of want to go through how I go through charts and just to give up just a brief of how I look at charts and through the things I've been learning and how I've been approaching from a top-down analysis. I decided to stream a challenge to see so that I am like transparent and this kind of streaming also helps, and also I advise if you want to actually be accountable to someone, because when you're trading alone, you find yourself that you're so impulsive. You keep pressing buttons, you keep chasing the market. So have your set rules and criteria and when to get involved. I'm kind of still struggling with this. The hardest part in trading is controlling your emotions. I have not controlled my emotions. That is what is keeping me back. But when I get hold of these emotions, trust me, I'll be good to go. So, for anyone who wants to join the stream and wants to see how I view the market, and whichever strategy you're using, you don't have to move away from your strategy. You just have to incorporate some of these things in your strategy. You will see things change and you see the markets differently. So going on to our weekly chart, I'm going to use Nasdaq and ES. The things I'm interested on the charts, I need to mark it from the monthly time frame. I need to mark the previous weekly lows, previous weekly high. These price points are pretty important, and price action reacts on these price points. This is my previous weekly high. So I have to be aware of all these price points on the charts. Previous weekly high, no, previous monthly high, sorry. I start on the monthly time frame. So this is previous monthly high, previous monthly high, previous monthly high. So I do this for the pairs I'm trading. So if you're trading Euro USD, you do this to GBP USD, you do it to USD, GBP USD, Bitcoin with Ethereum. This is the previous weekly high, previous monthly low right here for NQ, for ES. I do this, and then this is the previous previous monthly high. Once I'm done with this, I look at important price levels. When you look at a low seated alone, this is an important price level. So I include this in my analysis. I can call it a previous monthly high because it was a month. This is on a monthly time frame. You can name this as August. This is Thursday, August high. These price points are so important if you keep watching how I trade and how, instead of naming all these monthly highs, you can name this. So this will be 1st August 2024 high. You can name it. This is August. 1st August. This one is not important. It was important when price was trading at this point right here. 1st August. Low. So I kind of want to keep these points charts because they are one of the references I use. So this same thing, same date. I will kind of just name them as previous monthly highs, whichever month they are they're all previous monthly highs. Whichever, when I see, if you look at this high right here, this is not so important because this one went through it. But this previous monthly high is important. If you want to know the importance, you see how price came and literally just took it out and acted as support to go up. So this one, I will not name this because it's just next to this one. Any other significant high you can see that is on the monthly time frame. I think this high is still important. Yeah, I'm gonna still maintain it. I label this price. This is a low monthly low. I label them so that I observe price action. When I put it here, let me just rename this to September 2024 high, because it will confuse me. September 2024. No, this was the lowest number. And I'll also come and label this one. I'll just maintain it on the chart. This is September 2024. It is 3rd September, okay? 2024. The 2024 low. So I'll just maintain it here. So when I see that I don't have any significant price level, then I can go on to the weekly time frame. On the weekly time frame, what do I have? So when we come into the weekly time frame, that's why I said this low and this low are in the same place. That's why I didn't want to put so many lines. So if I say that these both are in the same place, with the previous monthly low, 1 month, let me see. See this previous monthly low, then I'll choose to ignore this one, okay? And I take this low. Let me just maintain it for now, but I know it's the down one I'm interested in. Let's go to the weekly chart. In the weekly chart, in NQ, so I have a low right here. I don't know where this monthly low is coming. I think we had a gap right here. That's why we are unable to see. So it's confusing me. Okay, fine. So I'm looking for important price points. Let me leave it like that for now. On a weekly time frame for both pairs where price can react from. Okay. So when you come here, you see we have these are weekly. This is our weekly time frame. On a weekly time frame, I look for important liquidity pools. So this one is important. So instead of I'll leave this as a previous weekly low. This is on a weekly time frame. I'll maintain it as that, and also this one I'll maintain it as that. It's coming out very well on a weekly time frame. Do I have any other liquidity points that I can see on the left towards this that is so important that I think price action will react? So you see this low right here. Okay. If you're confident with the breaker, you'll see how this can be a break at this point right here. This low right here. So instead of taking this one, I'm gonna take this one. I'll name this previous weekly. Previous weekly low. What happens that these points can be used by price as support or resistance zones. So I come here and I look for any significant level. You see what I'm talking about? You see, from this point, what happened? You literally sold off from this point. That's what I tell you. These points are so important. Go to the previous weekly low. So you break above this, it will act as a support to go high. That's why I kind of keep these price points so important. Now, in the current trading week, I need to know the previous weekly. This is the most important one. Now, since we are going on to next week, this one is now our previous weekly what? Previous weekly high. This is the previous weekly high. This is our previous weekly low. Going on to next week. Previous weekly low. So I think I need to let me make the weekly lows distinct. Let their color be these current weeks. This to distinguish them from other colors. So what you need to also know is that you need to know the previous weekly high and the previous week low, and also the consequent encroachment of the week, like the midpoint of the week. That is according to ICT. ICT tells you to make sure that you are aware of these price points. Well, this video is going to be a little bit longer because if you want to learn well, you have to put in the time. I do the same thing to this pair also. This weekly low. This is the previous weekly high. This weekly high. This pair, we may see this pair like market open, and probably we will just go up and go, because if you look at this price action, this was a previous support zone right here. This one, previous month. We'll see what the market. I'm expecting the market to open with a gap up on a weekly of new week opening gap, as Trump has been tweeting. So these are previous weekly high and low and a consequent encroachment. So if I look at this point, where are we on a monthly time frame? So we look at the previous monthly high and low. We also need to know the midpoint, okay? The midpoint of the month. Where is that midpoint? The monthly consequent encroachment. Like at this point, you know that you are in the middle of the month when price action reaches here. So this will be, I'm gonna name it previous monthly consequent encroachment. This monthly, like the midpoint, you need to know premium and discount. So you don't have to keep drawing premium and discount on your charts. You have these lines drawn out. So previous monthly consequent encroachment. That's the midpoint of the month. Okay. So that at any point, even if you're on 1 minute, you know that you're in the midpoint of this monthly high and low. Okay. That is why we keep drawing these levels. I know they are really a little bit congested, but when we move the lower time frame, they will not be so congested. So I do the same thing for NQ. Looking at this price action, previous this one, we literally this month we reached monthly. Let's get the monthly. I do the same thing. This one you do it once in 2 weeks. It's not a tiresome exercise because these levels will not move. You have these levels drawn out and you just keep referring to them. Most times when the previous monthly consequent encroachment matches with any liquidity level or swing high or swing low, it is always a strong point. So this is the previous monthly consequent encroachment. Now that you know all that, when ICT tells you you have to be aware of the previous day's high, previous day's low, those things you should note down in your notebooks. Previous weekly high, previous weekly low, previous monthly high, and previous monthly low. The consequent encroachment of the previous day, consequent encroachment of the previous week, consequent encroachment of the previous month. You can go on and on. So previous sessions high and previous sessions low. These are so good price points to frame trades for. ICT uses these levels so many times. So now that we know the monthly, let's go to the weekly range now. On our weekly range, we need to know the weekly consequent encroachment, because if we are bullish, we will buy below the discount. We buy a discount. Okay. So this is now our previous week's consequent encroachment. I'm just gonna do this here. For ES. This one helps you to know on the 1 minute, because you're going to trade on 1 minute, you will know where price is. You don't have to keep flipping charts This helps you to also grow your muscle eye memories of these charts. So this is previous month. Now this is previous weekly consequent encroachment. Okay. We go to this one also. We do the same thing we're doing previous weekly. Where is the midpoint of our weekly range? You will see the importance of these things when we go to the lower time frame. So this is you do this once, you don't have to keep doing it every day. This is like on a weekend, Saturday or Sunday, you're doing a price action for the next week. Previous monthly or previous weekly consequent encroachment. Okay. Now, once we have that, we have finished our analysis on the weekly, on our monthly, and we are now moving on to the daily. Do you see any liquidity point that you need to mark out that you think is important? Okay, nothing. There are so many things we could talk about, but let me just be brief and straight to the point. So we got the daily time frame. Okay. Now, when we come to the daily, I'm going to analyze, I think, one chart by one chart so that we can know where we are on each chart, because I will not be able to on the screen display. So since I know where we are, basing on what we have seen so far, you do the same things also on a daily. Okay, previous daily high, previous daily low. When you go to now, the 1 minute, and you start trading. So, but focusing on, let's focus on NQ one by one for now, and we need to see how price action has been behaving. When you look at this price action, we have just taken this liquidity right here below, a major pool of liquidity. This is 2020, 2024. Even we need to know the previous year's high. Because it is a price point which never changes. Okay, we can have this is 2025, 2024. These are strong levels. This one, you put it once, it will never go previous. It is 2024. 2024 high. 2024 high. But when you're watching this, you can just, if you want what to do, you go just and you see where we are right now. You can also get the as consequent encroachment so that you can know when you are where you are. Look at what has just happened. We're in 2025. Don't you think we've just taken the 2024? Wait, 2024. Imagine we knew this previous year's high. It is 2024 low, a yearly low. And that's why we have been moving up like aggressively. I mean that I knew this. I didn't put it into action. Because of work and also trying to balance work and trading. So this one will be previous 2024 low and 2024 high. You see how we took out previous year's low and we moved up. These levels are so important, let me tell you. You have to keep referring to these level points. So let's go back to our 1 day. Imagine what has just happened. We have just taken out 2024 low. You know how many trades you have if you quote this trend. And where do you think we are going? We need to know the consequent encroachment of the year, the midpoint of the year. These levels may be appearing like this, but when you trading on 1 minute, trust me, these levels will not see them like this. So this consequent encroachment over there is matching with our previous monthly consequent encroachment. So you see most of the trading, imagine we moved from here to here. In 1 year we were consolidating, but look at this. This volatility is terrible. This is so nice. It's a good time to make money. Those who know how to trade have made money. So this is it. I'm going to edit this and also say also 2024 consequent encroachment. Let me just put it in the middle. Now, once we've done that, we are going back to our daily chart. So what do you think we've done? We've taken the previous day's low, okay? Previous yearly low. Where do you think our draw on liquidity is? We are going to the midpoint. This is our focus now. So can we get now? Where the eyes, where the eyes symbol also. Today that's where we're going. So many symbols. Let's take the blind market. Whatever is the blind. So we are walking towards here. Okay? Where is it coming? The working man has refused to come. Take the moon or the sun. What do you call it? Okay, fine. This is an emoji. Let's look for another person. The blind man has refused to come. Anything black. This. So this is where we are going right now. On a daily time frame. On a daily we are bullish. Why are we bullish? We have taken out liquidity. Previous year's low, 2024. Very key price level. We got support from the previous month low. We are going to the midpoint of the year. This is our draw on liquidity, and this is where we are going. Okay. This is it, our draw on liquidity. This was the previous weekly low. You see what happened this week? When we broke below this week's low, price action got support from this level. What do you think will happen when we break above that level? So in this case, we are very bullish. Tomorrow we may open with a gap, and we have NFP next week. So let's watch and see with the Trump tariffs. Once we have these levels on our charts, I wanted to shorten these levels, but I may interfere with my okay, fine. Don't want it to move. What's happening? Happening my things. I don't want to move my level, they are not be accurate. Okay. This price level was what? The previous weekly consequent encroachment. Previous weekly high. Let me just go to the weekly and reorganize my, sorry for that. This level here. Previous weekly consequent encroachment. You have to be accurate. If you're not accurate, you will suffer, as stop loss will come and hit you. So now, according to ICT, with our teachings we've been following, so, and according to what I have seen, this is where we are going right now. This is our drone. This symbol is not so good. You get a better symbol to give us a direction. Define it, please. You can just keep forwarding as I try to do this. But the symbols I refuse to come. I cannot even search them. So nice. Looking for the eye. Take 18. Yeah. Take the 18. This is nice. So this is where we are coming. 18 years and above. So you should know that we are coming for 18 years and above. So take the sell side. Are we putting the market structure shift? Yes. This one here. We have a market structure shift here. We trace to OTE of the range. Keep buying. We buy until we take what? Our first drawn liquidity is this low, this high. This was when first April high is one of our first drawn liquidity. Okay, I'm gonna label it as a key price point. So this is gonna be first April. First April high 04 high. Let me put it inside. Okay, so that's a very key price point. This is our first drawn liquidity. You know what we will reach up here. When we reach the previous year's consequent encroachment, which is this one, 2024, we are like in the midpoint of the year. There we can go either way. Okay, but for now we can buy because we're in discount of the year's range, and we have moved. So now, once we have all this, we have analyzed our market. Let's first go and see NQ. Yes, sorry. So according to ES also, we do the same thing for year. I don't put the year. So this is 2024. 24 high. So this is the only video I will make for using these highs and lows. You have to watch it and make it black and thick. And the 2024 low. I don't know what was happening to me. I should have put these price points through 2024. No, 2024 low. Now we move from liquidity, we check out liquidity. I need to know the year's consequent encroachment for all these pairs. Mhm. So this is the US consequential encouragement. Let's say 2024 consequential encroachment. And I'm gonna just click on its signet. Just this. Yeah. So once I'm done, I go to the daily, now on a daily time frame. Once we've taken the previous look at where the bodies have stopped at this low. These are very important price points to act as support and resistance for price. And once I have that, we've taken out the low, we've broken above this. So we are literally coming for the consequent encroachment of 2024 here. And this is it. When you look at this high here, we'll probably hit some this high here. Is also our target. This is also it's called what? This is 2024. Now, this second, it's not first April, second April high. So SMT can be greater than these highs. That's why you label SMT is greater than the same time. I'm gonna label resource. This was the second. So once we have all that, and we know that our draw on liquidity is midpoint of the range of the yearly range, also midpoint of the previous weekly range. Okay, so these weeks when you come to, you can put the dates of these weeks. So this is the week of 2025, so you are aware of which week 25th. Okay, this is from 25th to yes, from 17th to 25th. So to be more accurate, you need to put these dates so that you don't, there are so many weeks otherwise you'll have, you don't need this. I don't know this. So this is 25th also. The week of, you can label it the week of dash to 25th. And it ends on previous week low, ending 25th. Done. Other rows will be other weeks. We do the same thing for NQ. Previous weekly high, previous weekly high ending 25th. Even the low, 25th. These are things you keep adding on. 25th. So, now, once you have that, you will not confuse them when you're in 1 minute. Now, what do you think can happen? We have the previous weekly high and previous weekly low. We could come fill this gap. You see, there was a new day opening gap that we left unfilled. We could come fill this gap, then continue higher, or we could go higher, depending on what price does. For us, our objective is just to react. Now, this is pretty it. These are the highs and lows you need. Adding on to the previous day's high and previous day's low. Once you have all this, okay, now going on to tomorrow, you will need these price points. This is what? Friday low. You will need it. So it could be a previous day's high and previous day's low. Okay, I'll just put it as the previous day's low. Even this one you need it because on those charts you always need those ones. Previous day's low. Even the previous week's high, leave it like that. Previous day's low. Previous days we can sweep it and go high, or we can sweep it, go lower. So now that's it. That is all you need. I always want to watch price on the 1 hour. So we know that we are going up. Going back to NQ alone on 1 hour. What do I need to see? From daily, I drop down to 1 hour. Okay, we have these new opening gaps, and IC tells us to use these gaps for at least 5 weeks. I have an indicator which you can use for new day and new week opening gaps. It is a good indicator. I advise everyone to get it. Just set up something here. Let's change color. So my indicator's color. I always want this new day. Where's my new week opening gap? New day to be like this, I think. And this is good, like this. That is for new week. The new days can mean like audio. And I can also make them a little bit visible. Okay, so that's it. So I like to move from this daily chart 1 hour. I will move to 1 hour. I will make a video about price reversal signatures. So this one is just a top-down analysis. Okay, so just a top-down analysis. I'm gonna make a video on reversal signatures, or I'll upload it. So on the 1 hour time frame, you see your lines. That's so clear and perfect. Look at this previous month. Price comes, fails, breaks above, fails, breaks it, comes and gets support from it. So this is on the 1 hour time frame. Now going on to 1 hour, what do I need to do? I need to be able to view price from Monday to Friday. How do I do that? An indicator which shows daily highs and lows separate. It calls weekly. In this one, let me see. Yes. So this indicator is good. Let me just change it to black. Like so many colors. My things. It's good to have neutral colors, because when you have so many colors, you're going to be so under previous day's high, weekly highs and lows. I can put weekly color to be this. Okay. This is the daily separator, weekly. Okay. So you see, in 1 hour time frame, this is an indicator I use. Okay. This one, so you use it just to know, and you want to know where are you in the weekly range. Okay. And you want to see price action for a full week. You see the last week, this from this high, this was our week from Monday up to this was our previous weekly high. See this? So sometimes you may not have drawn your days properly. Like for example, I don't know where this one was, but I will move this week, because this was this. I'll move this to here. Previous weekly high. See how we got support from it from Monday, and then this was our previous weekly This is previous monthly, but also we had this previous weekly low. Previous weekly low. Basing on this. So now when I come here, this is this one here, right here, previous weekly low, and then this is our previous weekly high. So this is how the daily separator helps me to know how to refine my weekly. I have to see, able to know that when you're looking at MMXM, the market maker buy money. We have an original consolidation right here at this previous weekly high. Then I can remove this, make it a better line. This is our previous weekly high. The other week which has just ended, okay? For this week to this one, I can name this as Monday or 14th. This is ending 14th. This is 14th. Saturday 14th. 14th. So that is previous weekly high of 14th. Not last week, okay? Only on the charts. So it can be a price point. Price can refer to until you see it, but not refer to it anymore. So now this is the Friday's low, okay? Previous day's low of Friday. I think price will come back here. I doubt. We'll see how because now our target. Oh, we've taken out this high. So this is our next drawn liquidity. So I'm gonna take out this indicator. Once I know what I have seen, I can hide it. I don't need to cloud my charts again. So now that I know that our next drawn liquidity is right here, we can retrace, or we take it up, or we can take it up, whichever price wants to be. Now that I'm aware of the weekly range, these consolidations tend to support price. So you see this consolidation is perfectly matching up with the new day opening up. So I'm gonna do this week. We must use these things for 5 weeks, okay? According to ICT 2024 meditation. So this is a new week opening up high. Now this video handily covers almost everything on NQ. The new week opening up high. New week opening up high. You can put the week. This is about which week? The week of 13th April. When you actually look at ICT's charts, they are always there. 13th April. You need to the high, the low, and the consequent encroachment. So this low is matching with this previous weekly low. So I do not expect price action to go if it is act. Opening up, new week opening up low, and you also mark the consequent encroachment. Here it is. Previous monthly low is almost matching with these levels. They coordinate with price action. So this one, I want to see the midpoint. Okay, I can go back to 0, 0.5, and 1. So I want to know the midpoint of the range. I want to know the range on this. Sorry. Why can't I? Like I can't undo some things. So this one, the new opening gap high. Right here. I want to mark off the consequent encroachment. I just want to know where it stops. Okay. I'm just going to name it as previous week monthly low, and also new week opening up consequent encroachment. Consequent encroachment of 20 this month of 11th April. That means April. Okay. We can have this in the middle. God, that's so much. Once we are done, so this is, you can move this price action right here. You can extend it further. This opening gap. This gap is going to be so important. Next week's trading, this is going to be a very important gap, depending on which gap we give. So I want to make it the same color. The same color. So you see this. So what can happen is that we put in a low here, so this can be liquidity, and price action can just come like this. It can open with a gap, or it can go up depending. If it opens the gap, takes liquidity here, checks out people, it comes and completely fills this gap, checks out early buyers, then it explode further. That can happen next week. We don't know that, okay? So wait for these levels to be disrespected and use them for price action. So going on to that, we finished that. I think pretty much that's it. We are done. We are literally done with our analysis, because depending on how price action goes, we will come and highlight all these ones. This new day opening gap is so important. New day opening gap high. So I'm going to put this high, and I'll just put it as an important price point because it did fail. Okay. See how we bought from here. We left inefficiencies right here. So depends on how we trade next week. We'll see if we want to come and revisit this gap once more or not. Okay. This will be also another point to watch for price. So we could come on, if we don't check out this high, if we break below and this place below this previous week's new opening gap, then we will see lower prices. If we do this place below here, we'll see fill this gap and come and tap to this price point here, then we can go up. Or if we want to go down, depends. So, but if we fail, we'll just fill this and fill this place above this, then we'll go up and take out this high up to the week's consequent encroachment that price action is coming to the previous years. Taking the previous year's low, we're going to the point of the year. So pretty much that's it. That is how I use these price points. Now let us study these levels we have highlighted on price. We took trades on another point I forgot to tell you is that these highs which have not been taken out, they are so important price levels. So this one, if you put back our indicator which shows us weekly separators, is this the one really? This is the one. Okay, this one here. So when we see this was a week, this price action right here is what I want to bring your attention to. During this week, This was it. From here to here is a week of price action. So this is the previous weekly high, but I don't know which week, so I just put the highest point, previous weekly high, and this was a week of 9th April. This is 9th April. This is 9th. I want to show you something, how I use these points. After I've done that, I don't need an indicator now. I'll remove all this so we don't record our charts. Now let us go back to Friday's price action, and I show you something. Price reversal signatures are so important. If you master them, markets will show retracement back. So we're going down to 1 minute. So I move from 1 hour on NQ, 1 minute at a micro time to look for opportunities to go long. Now look at what happened. When did this high form? It formed on 9th April. Look at what happened on Friday. Price came and bought from here. The only thing you have to master is how a reversal happens. If you're here at this previous monthly high, this is your key level. You have a fair value gap that is like one displacement. You see price beginning to displace. Tap the fair value displace. The moment this candle closes, you can buy here. Stop loss below this one. Target this breaker or this high. Okay, that is not random. Let us look at 9 on that day, opening bell of 9 what? What do we call it? 9:30 opening bell. Okay. So assuming we were on that day, let me just go back to and show you something. 1 hour. 1 hour. So I move from 1 hour to 1 minute. So from 1 hour, I'm going to replay price here. I'm looking for 9:30 at 9 up to here. Remember, you had drawn these levels already previous weekly. You don't know what is gonna happen. Okay? You go back to 1 hour, 1 minute. What happened on the 1 minute? Actually, from here, you see how price either consolidates from these levels or we come trades from these levels. We target them and we trade away from them. Okay, so let us see how we could have traded at 9:30 open. This is 9:30. This is at 9. We hit a previous day's low. Like I told you, these levels. This one did happen. Did it happen? Yes. This one hadn't yet happened. I think this one is gonna be for. I'm gonna use this for the next trading day for tomorrow. But we took sell side here. Okay. Remember how the market we took sell side right here at exactly 9. We took all this liquidity. When you mark from 7, you're looking at a 2024 model. You look for relative equals now. This is this is sell side. Okay, we took it at 9. We put in this candle with displacement. Where do you think we're going? We're going to take out buy side. Where is it resting? There's buy side here. Remove this mark point get. So we had buy side right here. When we had buy side right here. That is just a sample. What happens when you take sell side? You have a market structure sheet right here. Okay. You take in sell side. That was the news candle. Once you take sell side, we have a market structure shift. You're waiting for 930, remember? Market structure shift, and then this is OTE. Look at what happened. Where did this candle stop? Right here. I think this candle is supposed to be a little bit up. Right here at exactly 930. You know, we've taken buy side. We are going sell from the going for buy side. OTE to the previous weekly high of 14th April. And this was 20 people. This is not random. It went up. So on this day, how did we trade this day? On this day, we were right here. So we thought, I think I read my charts poorly, but we had just taken sell side and we're going for buy side, resting up here and also up here. So there was no reason for me to sell from this point. Okay, I could sell from this point and take my profit at this previous weekly high. I'm not supposed to go to frame trades from here to selling shorts. When I'm near these levels, never do that. So you can never short here, even if it is an A+ setup. It depends, and you're even going against the trend, and you have a previous weekly high. At least the previous days low can fail to hold. So this is the loss we suffered. We saw price at 930. We thought it was going lower, and we didn't even have a key level. You see, this is just a new week, a new day opening, this was what? Let me just go back on this one shaded blue. It is not, this is a new day opening gap. It's not a so important key level compared to a previous weekly high, this up. So why would you sell from here? Well, that's what I learned not to do. At first I was doing it, so next time I'm going to do it. So we sold on stream. We saw this come, fail, break below. So we thought it was going to go below. I put my limit order right here. I put my limit here and my top loss just above here. I was targeting these lows. Okay. So price came. I think one was my limit. It had actually gone, it left us. And I put my limit order right here. Like this. Price came, put in this consolidation right here. Whenever you see this brief consolidation and you're going lower, 1, 2, 3, 4 minutes are enough, or 3 minutes. When candles are not moving away from each other for 3 minutes, I label this as a big consolidation on the 1 minute. And this is a key indicator that anytime the trend is changing. So you can buy from the top of this brief consolidation, price closes above this level. And you always act as support price for price. So you see, but for me, I put my stop loss just above. It came, I took off one contract here. I didn't move my stop loss, it came and took me out. Minus $100. Now when I saw, then I realized that I was doing something wrong. Okay. We took sell side. We are at a previous weekly high. I never what? Sell. This is something you should never. This never sell towards this level. When you're just near this level, okay, it's according to my mistakes I've done. Not to sell again here. So I see my clear reversal signature. High. Take liquidity here. Come, fail. Retrace to previous weekly high, get support. The moment at this level here. And enter this trade from here. And trust that it will reach the previous weekly high. Even though the flow was bullish, remember, from our analysis. Okay. If that fails, so what we did not chase, we waited for, whenever you see this candle, this was at a macro. The macro was at this indicator here. I can share with you the macro indicator 950, and you see this candle. I was confident that this was going to remain a breakaway gap, this gap here, but we didn't chase price. I was anticipating it to remain unfilled, and now I was looking for longs. I was so confident that we were going to be longing. So, but when we reach here, we failed to take out this high, we retrace. So I was waiting for this black candle, any bullish candle to close. I was supposed to have longed from this candle here, because now price action was confirming that now we are going up. To this high. I think I put my ground rate. So you are supposed to long from here with stop loss below this gap, or you long stop loss this trade when it is bullish, it can never go below this brief consolidation. So we took this trade on string, this one here. We said, and if this candle closes above, we are taking the trade. So we took the trade, and the stop loss was just right here. So the stop good with internet that day, remember. This was our first trade. This was the loss we suffered was short. We suffered the loss here, a short loss. I think I was trying to chase price. Okay, I didn't have my analysis on point yesterday. I was not sober, I can say. So we took one loss on Friday and minus $100, and then we won this one. So on a 50K account, I'm up $200. So you see, when we reach here, this is why I told you need these levels, previous weekly highs. We fell to this place above here. We put in a bullish price. The moment we break below here, now you see how you're priming your trades confidently without fear. Cross below here. Remember, we move from discount to premium. High, low, high. We can target the discount of this range from this high to this high. You may take it out, but we can always short. But because price action was bullish, we are looking for only bullish movement. So you could still take this long up to this previous weekly high. Do you see how price is moving? Now, if you don't take this, you wait. 920 to 1050. We come here, we put in a low. Okay. Immediately we start displacing up. We wait, take out this first low which was taken out. We come, we take it out. Do we break above here to make a break? And no. We take out this one again. And we put in SMT here. At this point, we had SMT with the ES. ES took out all these lows, but NQ failed, so we had SMT here. Next time, just go full margin. If this price action repeats again, you just sell from this candle here and be confident that now you're going to go up. Okay, this one Friday. You can be confident. You can take pick an account. You can take like two micros. 2 minis, not micros. Micro, sorry. So you see, this is it, breaker. If you don't want to take from here, you wait for break above here. See how this. You can even wait if you are not sure. High or key level. You can name that 2022 model. We have taken. You see the 2022 model. This is how you frame trades. Okay. We have taken sell side. Okay. Once sell side is taken out, we put in a market structure shift right here. This is the 2022 model. In the market structure shift. After I put in a market structure shift, we wait for this could be a breaker. According to Hydra, you can take this inversion, okay? This first fair value gap here. See how price comes and taps it, but for you wait for retracement into the OTE. If you draw your fib, you're not sure, you draw your fib from this high to this range, you see, midpoint of the range, you put your limit order. We shared this in the group that if at a macro price returns to this midpoint, we will be buying. But we're done for the day, so we didn't take care of our trends. So this is how you should be framing your trends. This is a key level. So have a key level, sell side is taken, market structure shift, retrace to midpoint of the range. The moment you have this, wait for a bullish candle to close above this, enter the market price, and so let's see if what happened. What happened is that I want you to just observe. Let me just walk through. We are at a previous weekly high and we are bullish, okay? Remember, you always take off your trade, your profits, okay? Fully. That's the beauty of knowing these price points. At a previous weekly high, we take out, we displace above. You see, we've been ranging here, and we know that we are bullish. We cannot, if you do displace above here, come back, retest, you can buy. Or we've displaced above. Okay, so now it means that we are bullish. Now we can wait and see if there is any retracement back to this level. I look for longs again. If there's nothing, then there's nothing, okay? If you're patient, I say trading is only for the patient. Those who are impatient, look at what happened. Do you sell here? No, there's no model for you. You wait. Where do you want to buy from? This key level, if price ever returns here. We are at a macro. Price has reached the key level. What happened? Wait for a market structure shift after tapping the key level. Key level has been tapped. Okay. We've taken out liquidity. Early buyers who buy from the limit orders. Do we have a market structure shift? Yes. We have a market structure shift. If you go to a line chart, see that? Market structure shift. We are on 1 minute. Okay. Market structure shift. You can enter long after one black candle. Okay. You're not sure, but most times me, what I'm impulsive, I'll long from here. And the stop loss will be below this low. Increase like with the market order. But we wait for extra confirmation. What happens? We wait. We had a market structure shift. We have retraced. We've hit a fair value gap. Do we? Now when price hits a fair value gap, you wait for one candle to close above this black candle. That becomes your order block. Now this is your order block. You can enter here with the market order. And yes, this is how I see it. Stop loss below the consequent movement of this week of this fair value gap. What has happened? What's happening? They press. You certainly don't see the charts. According to ICT, like I was telling you, the 2020 what? You can sell with the market order at that point, and you are sure that price will not take you out. Why? Because you've taken sell side, you have hit the key level, previous weekly high. You have had the market structure shift. As long as high, low, higher high, this is a market structure shift. Market structure shift, and this is OTE. You can sell anything and go full margin on this trade, but because this is a session which moves slowly, price will move slowly, but you have to keep taking off your contracts. Okay, you also have to use some logic. You don't just aim like all these points in Asia in a PM session. Do the things in AM session. But any retracement, now you see here, any retracement into OTE, you keep doing the same thing. Price moves, takes out liquidity, which you have this fair value gap. You keep drawing your fib from this high to this low to this high. You see, midpoint. Wait for liquidity sweep. Market structure shift will happen right here. Should we close above this? Sell your house and buy full margin. Close above this brief consolidation, like let's say long here. If we close above this, you can sell your house and you go full margin. Let's see. So when you see this happening, you know that you're not going to get tagged in. Whenever this happens, I tend to just buy at market price, stop loss just below. Because most times price action is aggressive and it won't give you a chance. That's it. That's how we closed off the week. Actually, I remember here, I wanted to put to buy, but I was so scared because I made a loss. This is my price settings. So that's it, guys. Let me know which video I can do. But that is a good video of how you can use these previous weekly highs and lows and how I do a top-down analysis and trading of NQ. So that's it. I know it's a long video, but you can watch it in a fast-forward mode. But if you really put in the work and listen to all those words and you keep doing that, you'll see things try to improve. Right now, I can say I'm improving. I'm not there yet. This is not where I want to be, but I'm better than how I was last year. At least I know when I should enter a trade. I know when I should not enter. So what I'm fighting are my emotions. Once I've mastered my emotions, I know my price signatures. I know when the trader has activated. I know the things to look for. But the human part still has me. Once I overcome that, I'll be good to go. Thank you. This has been a long video. Let me know if I can improve. Have a good day.